It's August 1st. It's August already. And let me get my microphone closer. And hope you're enjoying your day. It's a little cloudy out today. And we have a pending hurricane coming. So that's what's happening in Hampton Roads. I'm Chris Gargiulo, broker associate for Willow Beach Real Estate. There's my sign back there. Not so sure. It's coming out too clear there. Might have maybe had to make it bigger. But that's the cover of my blog, RealEstatewithMrG.blog, back there. So I wanted to go over a few things this week. Some are a repeat of what we've talked about before. And I want to go later on into the report of the GDP report that came out around Thursday. And that's very important, dealing with our economy and how later on it will affect the real estate market. And again, most of this, when I could show you a snapshot of what's happening today, or let's say this week within the real estate industry. And as of now, the industry is good. The biggest thing, and as I've been saying for every live stream that I've done, is that we need more listings. And again, if the listings are priced correctly, and that's the big word there, correctly. You can't just put it on any price that you want, even if it's, you have a sentimental value to your house, and I think it's worth a lot more. But we have a very, very wise buyers out there who do a lot of research, and they'll look at Zillow and look at this estimate, which a lot of times is not correct. I won't say a lot of times, but a good amount of times. It really can't go by that. But they definitely could tell when a property is overpriced. And And this, doing the research for doing a CMA, a comparative market analysis, it has to be very subjective. That's the problem with this estimate. This estimate is using computer algorithms, but it doesn't analyze it as much as a human being who could think subjectively and say, well, this house has been listed for a higher price because of all of its upgrades. And then down the line, we have a short sale that's priced a little bit lower, just to sell it before it goes into full foreclosure. So, to my knowledge, and I think that's the biggest problem with this estimate, is not taking all these other factors into account when they're giving you their estimate. But a lot of people could just go see, all right, these are the houses in the surrounding area that are on the market or have sold, and I don't see any of them that high. Okay, the houses in your area are selling around 200,000, you have yours on for 230. Many people will find that out quickly and say, well, that's not for me. I'm going to wait till they bring down the price. And that longer period that it's on the market and you're dropping the price, that they'll keep on saying, well, what else is wrong with the house? So the best is to pinpoint that price right at the beginning, so there's no questions. And we've been seeing that. We've been seeing homes that are priced correctly. Within 24 to 48 hours, they're in a contract, and sometimes they have multiple offers. So that's very, very important. So I'm just going to add here, which I think I can. And it should get up on my screen, I believe. And is it? Okay, yeah, I have to hit show. We need listings. So that's very important. So again, I can't repeat that as much as I can. I mean, and I'm saying all real estate agents, we need that. We, in this part of Virginia and mostly around the world, we have cooperative brokerage. So most likely the house that I list will be then purchased with a buy from another agency. So we all help each other with this. So we all need, and I, of course, it's my live stream here. I would love to get your listings. Okay. All right. So that's very important. But I want to go over and let me get these up here into my, just give me well, anyway, first of all, I want to do this. I'm going to go over what topics we're going to go over today. And I did a short little video on that. It's and this is a little review of what we're going over right now. So in today's topics, we have the present state of the real estate market, and we have mortgage rates. We'll talk about that, and the GDP status report. Okay, that ended too fast. I got to learn how to make that stay a little longer. Okay, so let's take a look, and I got to get it up over here. Uno momento, por favor. Let me get this up here. Okay, hold on for a second. I thought I had this one. Okay, we'll go back up the desktop here. Oh, here it is. Okay. Now, I have to switch my screen. I'm going to share my screen. And where is that graphic? That should be, okay. I have it up here. Okay, here it is. All right, so where's the housing market headed for the rest of 2020? The real estate market is forecasted to finish 2020 with a growing strength. Home sales are projected to remain strong for the rest of the year and increase in 2021. Here they have the 30-year fixed interest rates. Now, the day that this infographic was posted, it was about probably around Tuesday, Wednesday. It has gone up a little bit, maybe to about 3.3%. But it's going to waver back and forth or hover around the 3.0%. It's a very temperamental, this interest rate, and I mean, it's not going to be a gigantic jump from, let's say, to 3 to 4 within a week's time, but it's going to hover between 3.3 and go down back to 3, and then a little bit below 3. So but it's going to stay in this area. And my feeling is that it's going to stay that way because as we talk later, I don't think, as for the overall economy, when I'm talking about the overall economy, I'm not talking about the real estate market, but there's going to be some trouble ahead. And so raising the interest rates during a troublesome period, an economic troublesome period, is not a good idea. So I feel pretty confident that the interest rates will stay around this 3%. I don't know if they could make it much lower because you got to base it against the federal prime rate, and it's they're lending with almost 0% interest. So I can't see them going much below this 2.9. Maybe down to about 2.8. Could be lower, but the banks have to recoup some sort of money when you lend money, and this very low rate is not doing it. Okay, where they're making their money is in the volume, because as it goes down, of course, more people go into purchase, and more people will refinance. So it's going to be a volume, income coming in, or a profit. But if the economy slows up more and people are not buying or refinancing, the banks then are losing money on lending money. But if you look here, again, you look at the 2020 forecasted median price of homes, you're still seeing it increase. They have for existing homes and new homes, okay, brand new constructed homes. And these are the reports from Fannie Mae, MBA, that's dealing with the mortgage industry, and the NAR, the National Association of Realtors. And again, they see also an upward trend to home sales that are actually closing. And it looks like, this is a great indicator here. This is new construction. So new construction sales are going up. And the biggest reason those are going up is because we have very low inventory. So that's dealing with the current market and the way it's being predicted for the future. And again, a lot of these stats came out prior to this week's GDP report. I also, let's see if we have it. No, I already discussed the mortgage rate, so we'll keep it there. I found one video on bank rate that talked about the future of the interest rates, and it's basically saying, I'm taking it from them. They're saying they really don't see it going up much higher in the near future. Okay, and they definitely are not going to raise it during an economic downfall. So let me ask real estate. Okay, mortgage rates. And let's bring this up here, and we'll show this one. Okay, so mortgage rates hovering around 3%. And of course, if you could do a 15-year mortgage where there's less risk involved, you will get even a lower rate on your mortgage. So 15% mortgages, if you could do it, if you could afford the payment, will give you even a lower mortgage rate on that. All right, so what I want to then bring it now, to help promote myself, let me see if I can get this up here too. Let's see, is it up here? And let me go again to the screen. This one I might have had saved up here. Let's see. Well, the other graphic I was going to show is the importance, especially now, using a real estate agent for your purchase to guide you through this tough time that we're going through. And again, I only say tough because dealing with the market, with the way sellers want their homes to be approached, where they want to have really a limited amount of showings. They don't want open houses. They don't want a lot of people going through the house. They're requesting that when you go in, you wear a mask, or they put a box of gloves by the doorway that you put on gloves, maybe even foot coverings. And so it's a time when you really need, more so than ever, a middle person to work these intricacies out. Okay, what's going on right now? One of the big reasons why we don't have the listings is because people are nervous about having a lot of people walking through their house. And there's ways that we've worked with that. And it's best, and it's always good, to use a real estate agent in your home buying process or listing process, listing your home process. But let's spend a little bit more time on the report that came out this week on the gross domestic product. And the reason why I want to go into this, because with the posts that come about, that we as real estate agents, we promote to our potential clients, and we show a very positive viewpoint of the real estate industry, which it is. As of today, if I'm looking at August 1st of 2020 and the months before, yes, we're in a pandemic, but the real estate market is strong, and the numbers are out there to back that up. Last week, I showed you the local real estate market from RAIN. That's the multiple listing service we use in this part of Virginia and the Hampton Roads area, and all the numbers are great. Okay, pending sales are up, home sales are up, home prices are up, construction sales are up. Again, always the listings are down. All right, so if we take a snapshot of what's going on now, things are going good. The ones who have been working within industry, whatever industry that is, who are able to work around the problems we have right now, as for instance, working at home, and they're able to do it, they are most likely pretty secure in their jobs. And these people who have long-term professions and they're settled in their jobs are out there and they're buying, and they're very, very serious about it. Okay. Now this week, the GDP comes out, and let me share this screen with you. I'll go back here, share screen. Was I still not? Okay. Maybe I was still off. Okay. You probably was just looking at the same report. Okay. Okay. And we see that the GDP decreased 32.9% in the second quarter. So these reports come out every 3 months, and they aggregate all the information over this time period. So during the last 3 months, the GDP has decreased. Now, what is this GDP? And I'm going to stop sharing this and go back to me. And let's go to before we go to the article, let me see if I have to do this one. This is live TV. Okay, Chrome time. Okay. All right, the gross domestic product, GDP. The gross domestic product is the monetary value in local currency of all final economic goods and services produced within the country during a specific time period, a specific period of time. It is the broadest financial measurement of a nation's total economic activity. The total goods and services bought by consumers encompasses all private expenditures, government spending, investments, and exports, but excludes imports that take place within a designated country. So that covers a lot. And as we see, that dropped 32.9%. And that's a big amount. So we're going to bring up and here, because I looked this up, this is still giving me okay. A collapse that wiped out 5 years of growth with no bounce in sight. All right. Now, this graph here is showing you at times where the GDP has fallen below zero. All right, and it went back in 1950. I think in this article it shows you even below when it goes back to the maybe it was in this article where it goes back to the Great Recession. But if you look here, going back from 1950. This is the biggest drop that is done here, which is the aftermath of the second quarter. So the coronavirus pandemic's toll on the nation's economy became emphatically clear. And this is from the New York Times. Thursday, as the government detailed the most devastating 3-month collapse on record, which wiped away nearly 5 years of growth. The gross domestic product, the broadest measure of goods and services produced, fell 9.5% in the second quarter of the year as consumers cut back spending, business-paired investments, and global trade dried up, the Commerce Department said. Investments are also people purchasing real estate as income properties. The drop, equivalent of a 32.9% annual rate of decline, would have been even more severe without trillions of dollars in government aid to households and businesses. Okay, for instance, the loans that they've given to businesses, and if the business kept their employees, those loans were forgiven. It's also the $1,200 sent to single people and $2,400 to married couples and $500 per children. That also helped. And if the government did not do that, there would have been a greater plunge in the GDP. But to continue over here, but there is mounting evidence that the attempt to freeze the economy and defeat the virus has not produced the rapid rebound that many envisioned. A surge in coronavirus cases and deaths across the country has led to a renewed pullback in economic activity, reflecting consumer unease and renewed shutdowns. And much of the government support is on the verge of running out, with Washington at an impasse over the next steps. All right. So without reading everything word for word, for instance, what's happening right now with the government not continuing the additional $600 per week for people who are unemployed, that $600 a week also went for people to continue to purchase. All right, whether it's having enough groceries, whether it's buying different products. Of course, the people were using to paying off bills and paying their rents, but with any additional money they had, it was going back into the economy. Now, we've seen in many states an upsurge of the coronavirus, and some states now are also having either shutdowns or they're scaling back how many people could go out. So we're in a situation where a couple things. If the amount of people continuing to get sick and more states begin to shut down, or again, they're lowering their phases, and with people like 1.4 million people last week filed for unemployment, or actually it was this week. It's only Saturday. So we have more people going on to unemployment, and without that additional help from the government, if it's 600, even if they would lower it a little bit, but people need more help, this is going to hurt the economy even more. And the longer it takes to get out of this pandemic situation, the longer it's going to take for the economy to recover. And as you see, it's a domino effect. You have sports not being played. You have concerts being not performed. All right. So what's also involved? There are vendors who are at these shows and concerts. They're not making any money. People within the entertainment industry, whether they are performers or whether or not they're running the different venues, they're not making any money. Okay. So here in Hampton Roads, we have the Sandler Center, we have the Ferguson Center, we have Chrysler Hall, we have the Virginia Opera House. In Hampton, we have the American Theater. None of these entities are making money. And those people who benefit from that, the local merchants, the local vendors, the local restaurants, they're not making any money. You look at the tourist industry, or looking at the airline industry, very few people are flying. I don't want to say very few people, but it's really cut very, very high. And after a while, you see, like with this GDP, I mean, if you looked at a month ago, you say, oh, everything is kind of going all right. But then this big report comes out, the gross domestic product. And that's covering the last 3 months, and you see a big dip like that. That's a problem. That's a big problem. And if it continues, it's eventually going to affect the real estate market, in my opinion. So if you are looking to purchase, if you're looking to list your house, well, let's talk about, first of all, listing a house. If you're going to list a house, I urge you again to list it now. And if you're in the market of buying and you're secure with your job, no matter what happens to the economy in the relatively near future, then I would say go out and buy now, before anything else happens down the road. And this is just, again, an opinion. Let me go back to myself here. And let's get, okay. Where am I? Okay, let me do this. Did I do stop screening? Okay. Okay. So it again to capsulize this, the longer we are in this pandemic and fighting to lower the amounts or eradicate the whole pandemic, we're still in this kind of limbo area. And the longer it takes, if we don't have a vaccine or a cure of it by the end of the year, the beginning of next year, it's going to linger more. And the GDP, the gross domestic product, with services being made and sold, and the consumers having money to spend, it's going to hurt the economy. So right now, again, when we take a snapshot of the real estate industry, it's strong. I don't know what's going to happen, coming the new year, which is really not that far away. We have to beat this pandemic and get back to the natural flow of work. And actually, once we beat the pandemic, it's not going to be like the next day, boom, everything is back to normal. It's going to take a while to get back to some sort of normal. And whether if that normal is airlines cutting back on the amount of people on the plane, and I wouldn't mind that. Restaurants not having overcrowded of tables and tables really close together, even though, hey, they need income, but there's a part of that safety that we need that we'll learn from this experience. I mean, I've learned, and I'm sure you have also, how quickly germs, viruses could spread. Doesn't take much. So we're becoming very aware of a health situation and how to deal with it. So once this pandemic is over, there's going to be changes that are made within all different types of industries on keeping people healthy. So our new normal actually may be a different normal. So wear your mask, keep social distancing, wash your hands. We got to stop this thing so we could keep our economy strong, get it back up going. If you want to list your house, give me a call, okay? I'll post, you have all my contact information. You could just respond to wherever this is being shown. It has 4 destinations. And let's list your home, get it up there on the market. I'll do my darndest to price it correctly. And in the past, I've been pretty good. I'll give myself a 95% in accuracy, where I dealt with clients who said, no, I want the price higher. And they end up selling it in the price range that I gave them. And it was a tight price range. It was like a $5,000 price range. It wasn't like a $50,000 price range. So we need your listings. If you want to go out and buy, those mortgage rates are good. They're hovering around 3%. And take advantage of it. Take advantage of it when you can. All right, that's it for now. I'm at my 10:30 point. I'm actually at 10:35, and I want to keep it short. So we'll see you next time. Let me just put up here. See you next Saturday. Okay. Enjoy the week. Be well. Be safe during the storm that's coming up. It looks like it's going to reach us, depending if it hits land before it comes to Hampton Roads. The wind should be lower, but it may be, a direct hit. So be careful, be safe, wear your mask, wash your hands. and I'll see you next week. Thank you.